It's all a fugazi. You know what a fugazi is?
Oh, fugazi. It's fake.
Yeah, fugazi. It's a wazi, it's a woozy, it's a fairy dust.
Money, success, greed, and corruption. If you've only followed the stock market through popular culture, those are probably the 4 words you'd associate with Wall Street. And I wouldn't really blame you. The corruption at Wall Street epitomizes the growing gap in income equality in the 21st century. But this month, the playing field has been leveled, and Wall Street have been knocked down by the most unlikely of sources. Welcome to a Reddit masterclass. If you're new to my channel, here's a quick introduction. I go over the reasons why some businesses are so successful, looking at their product or service, their marketing strategies, to the leaders who drive it all forward. Now, this is a slightly different video as it doesn't focus on the success of a company per se, but instead the collective marketing efforts of a group of individuals. Without further ado, let's jump into it. The significance of the GameStop saga is not just in the increase of the stock price itself, but in the David versus Goliath story which unveiled in the background. David being Reddit day traders and Goliath being the billionaire hedge fund short sellers. It is not just a story of stocks and investment, but one of a burning animosity which goes both ways. Reddit day traders despise Wall Street short sellers for their basic moral position. Their belief is the business model of short sellers revolves around profiting from the demise of companies, often hoping these companies go bankrupt, which leads to people losing their jobs and livelihoods. Whereas short sellers despise day traders for their risk-taking nature. Short sellers consider day traders to be gamblers who lack any edge in the market and believe their techniques will lead them to ending up on the losing side of the table. What is short selling? In a nutshell, it's when you sell high and buy low. Short selling is predominantly done by brokers and hedge funds who manage stock portfolios on behalf of their clients. Let's say a hedge fund client wants them to short 100 shares of the stock they hold on GameStop. Let's say the price of GameStop stock is at $20. The hedge fund would sell the stock at $2,000. When the price of the stock drops to, let's say, $15, the hedge fund would buy back the 100 shares of stock at a price of $1,500. They would net a profit of $500 minus the commission to the hedge fund. To understand the significance of GameStop's share price rise, we need to look at how hedge funds treated the stock prior to the intervention of Reddit users. Now, GameStop historically has shown that its stock price fluctuates a lot, often taking sharp but rather predictable decreases. In 2013, GameStop stock was valued at $50, and in 2021 it was valued at $20. This means it's a goldmine for hedge funds who specialize in short selling stocks. In fact, 30% of GameStop stock is held in the hands of hedge fund borrowers. The reason for any hedge fund to be interested in GameStop is clear to see. GameStop is one of the long-standing bricks and mortar businesses that are slowly dying out and making way for the world of digital gaming. Their specialty in providing physical copies of video games are directly contrary to the long-term interests of Sony and Microsoft, who are taking their gaming to a digital level, where games can be downloaded from their own stores, saving the hassle of PlayStation and Xbox for dealing with retailers. Basically, a lot of wealthy hedge fund CEOs are depending on GameStop stock to fall, and to fall hard. In other words, the more the price drops, the more money in the pockets of the hedge fund CEOs. To look at it in the perspective of Reddit users, they see hedge funds as evil figures who make their money betting on companies to lose value and to go bankrupt, which inevitably leads to the retrenchment and the loss of jobs for regular people. All the action has taken place at a subreddit called Wall Street Bets. This subreddit, which contains around 1.3 million subscribers, is popular for creating surges in the price of certain stock, and is also well known for their disdain of Wall Street short sellers. While they've conducted such surges before, the GameStop saga is unusual, simply because we all expected the stock price to drop by now. Instead, it hasn't. It has continued to increase. The idea pitched by numerous popular users at the Wall Street Bet subreddit was to hit back at Wall Street and pummel them into the ground. Here's the thing about short selling: if the stock price rises, you lose money. Most investors tend to wait for this price to drop below their initial investment price before selling. But what if the price just keeps increasing? What if it increases and never stops increasing? Or in the words of Wall Street Bets, what if it goes all the way to the moon? That is where hedge fund CEOs lose an infinite amount of money. I'm not talking about pocket change, I mean billions. Sometimes it gets to the point where the investor loses patience and asks for their money back, which means the hedge fund must buy back the shares at an even higher price, leading them to making a huge loss and leading to the stock price increasing even more. So the strategy of the Reddit day traders was to increase the stock price of GameStop by creating a huge surge of investment where they all purchased call options and stocks, making their Reddit community richer and taking away a significant amount of money from Wall Street. So now that I've set the scene, let's look at the timeline of events so we can see how the GameStop saga unfolded. Around 1 year ago, a Reddit user at Wall Street Bet suggested that GameStop was at an undervalued price. While this was initially laughed off as a joke, the users at Wall Street Bet quickly realized that GameStop was the most shorted stock at Wall Street. The result, they had narrowed their sights and they had found their enemy. Around the first week of January, Reddit users put up a series of posts encouraging the community to buy GameStop options and not to sell but to hold their investments, with the wider goal of punishing Wall Street shorters emphasized by Wall Street Bets. More and more people joined the revolution. As more day traders poured their money into GameStop, more hedge fund clients had to load up on stock to maintain some semblance of balance. Safe to say, this counter investment didn't do the trick. The price of GameStop continued to rocket, and as a result, panicked short-selling investors decided to cut their losses and sell at a loss. The result of this, GameStop stock only increased more. Fast forward to mid-January and GameStop shares increased from $20 to a whopping $150. But it wasn't done yet. Tesla owner Elon Musk tweeted this to his 42 million followers on Twitter. This led to another huge surge, but this time not just from Wall Street Bets, but from a wider community of people looking to make money on GameStop's rise. In just a week, GameStop rose from $150 per share to $347 per share. This provided a knockout blow to one hedge fund by the name of Melvin Capital. The $20 billion valued institution suffered a 30% hit to their fund as they lost $2.75 billion in the GameStop market. Overall, hedge funds in Wall Street lost a combined total of $91 billion from GameStop. GameStop, the money-bleeding company, was now valued at $24 billion. Three popular Reddit traders had profited a combined total of $3 billion. Even many average day traders who had invested a small amount were now significantly well off. To put this into context, if an amateur day trader had invested a small amount such as 10 shares at $20 per share, if they were to sell this at $347 per share, their profit would be $3,270 per share, all within 1 month, which is a lot of money when you consider the harsh economic conditions brought about by COVID. It's safe to say that some people at Wall Street didn't take this too well.
The reason the market is doing what it's doing is people are sitting at home getting the checks from the government, okay? And this fair share is a bullshit concept. It's just a way of attacking wealthy people, and I think it's inappropriate. We all got to work together and pull together.
Now you need to pay attention because this is where it gets interesting and rather confrontational. This is where Robinhood comes into it. No, not Batman's sidekick. It's a trading app which hosted the majority of trades concerning GameStop. It's a popular app for day traders because it allows for free trades, no fees, and no commissions. But it's important to remember that Robinhood don't do this out of the kindness of their heart. They sell retail investment data to large securities and investment corporations who use the data to get a jump on the market and make money with spread betting. Spread betting will take a while to explain, but in short terms it essentially means betting on which way the market is going. Unlike shorting or regular investing, you don't own the stock, you just bet on how much is going to increase or decrease by. Back to the point, what does Robinhood actually have to do with any of this? Robinhood, unlike the majority of other brokers, has branded itself as a broker for the people, encouraging anyone and everyone to invest, small or big, which is why it was such a big shock when on the 28th of January, Robinhood decided to stop new trades being made on GameStop. They informed their members they could only sell their stock and not invest any further, all while hedge funds were allowed to borrow more money to cover their short positions. I personally can't help but see the irony in a company named Robinhood that at the first glance of trouble decided to take away from the poor and give it all away to the rich. This obvious level of betrayal led to a cry of outrage at the users at Wall Street Bets, who claimed that Robinhood had taken a U-turn on their brand and was now supporting the big corporations. This speculation was not helped at all, and the news emerged that the $20 billion valued hedge fund D1 Capital who suffered a 20% hit in the GameStop saga, had coincidentally invested $200 million into Robinhood just 6 months earlier, raising clear questions of impartiality on Robinhood's part. So naturally, this brings around two obvious questions. One, are Robinhood being fair to their members? And two, are they acting in favour of the bigger corporations? The clear answer here is no and yes. The latter part is very much clear. The position at Wall Street, especially by the CEO of Nasdaq, who called for regulation into the GameStop investment so that corporate investors can reposition their own investments. In other words, move their money elsewhere, or in even simpler terms, market manipulation. This position of favouring the short sellers was reflected by the majority of brokerage apps who joined Robinhood in banning any further investment into GameStop AMC. So what can we expect for the future? Firstly, I expect heavy regulation and investigation into day trading, which may possibly increase the initial investment price as well as limiting the amount of stocks one can hold, with the intention of pricing out day traders. Secondly, I definitely expect Reddit users to return with a vengeance. While limiting their investments may have worked for Wall Street, it's more of a short-term, nail the door down and pray to God strategy. What they've subsequently done is give fuel and motivation to an angry mob of Reddit day traders, who will return for another battle, quite possibly waiting for Robinhood to announce an IPO, where they'll be waiting to short their stocks and ruin their stock prices beyond recognition, which is why I definitely expect Robinhood to remain a private company forever. This episode also shows that Wall Street may not be as untouchable as they once thought they were. With hedge funds reporting losses of up to $91 billion, it's clear to see that with the power of collective action, they're more than capable of being hurt and damaged. Thank you so much for watching. Please remember to like, share and subscribe, and stay tuned for my next video, which will be on how Clubhouse exploded onto the social media scene.